Good afternoon and welcome everyone. This is our second session since the start of the IMF World Bank Week here in the Middle East program. I have the honor to have with us today His Excellency Ahmed Kouchouk, Egypt's Minister of Finance. Welcome.
Thank you.
And today's discussion will mostly focus on Egypt's economic reform, with particular attention to the government's recent effort to promote tax reforms, rationalize public spending, improve debt management, and curb inflation. So, Your Excellency, we're very happy to have you with us today. And I'd like to maybe start by asking you, the Egyptian economy has experienced ups and downs through the past few years. Where do we stand right now?
We're trying to get out of the downs. No, I think it's basically a challenging environment yet, the external environment, yet we are seeing some of the big reforms that were implemented starting to show in the numbers, to show in the figures. We're not yet out. We still need to keep the course of reforms and to keep monitoring things. But on the fiscal side, we're seeing good performance on the whether last year where we were able, even without the one-off, the Ras Hikma deal receipts, without that we were able to achieve a primary surplus of 2.5%. The first quarter of this year also was very solid. We had a primary balance of around 0.5% of GDP ahead of our target. We had a very strong tax collection growth of 45%. So we had a better structure. We had a control on capex spending. It was a declining in nominal terms year over year by decent amount, just to give the signaling. We also ended last year with the debt coming down from 96% of GDP in June 2023 to less than 90%. Our external debt, the budget sector external debt, was also down in nominal terms and in percent of GDP. So there are a lot of improvements, but also on the monetary side, of course, the net foreign asset position have improved, the net international reserve have improved significantly, but we're still seeing the growth not at the rates and the level that we would like to see. So it's still, this is happening still at the expense of the economy being back on track. So, and this is something that we need to focus on also going forward.
Thank you. And coming back to this discussion about reforms and maybe linking this to discussions and negotiations with the IMF, Egypt's political economy of reforms in collaboration with the IMF is intriguing in the sense that many are curious about how these dynamics work. Does Egypt approach the IMF first to get the loan? Does the IMF approach Egypt first to get the loan? How does the negotiation work? What are the conditionality about, etc.?
Egypt and IMF has a very long and strong relation over the years. It's not something exceptional this time. It has been, and even by the way, in the years where there are no programs, we used. I mean, I can tell you, for example, at the Ministry of Finance, we used to have every year around 6 to 7 technical assistant missions to engage. So we are open. But not only with the IMF, by the way. I think if I remember well, I was doing the counting last year. I think we had almost above 20 maybe technical assistant mission anywhere from the OECD to the World Bank to the IMF and even from other regional partners and bilaterals. So we are open and we are always looking at best practices and getting the capacity. But when coming back to the IMF, I think this is the third program in few years, since 2016. Usually every program has its own nature, has its own context, has its own background. I think this program is the last one that we are now in, is a program that is trying also to help us improve some of the imbalances that was accumulated after COVID and after the period where witnessed a couple of outflows and development there. So it was mainly to deal with current account imbalances and, to be frank, also despite that the fiscal was quite solid so far during this period, but to deal also with, in general, public spending at large and how to put a better I would say, oversight across the entire public spending and how to improve the performance of non-budgetary entities also and performance. So this is where the main objective of this program. And how it's usually done is that we present our program, we present our thinking, we present our priorities, and we take it from there. It's always an open dialogue, an open discussion. Sometimes it's well calibrated, sometimes it needs certain revisions because there are different assumptions and parameters down the road. And it's like the budget. You prepare the budget under certain assumptions, and during the year there are changes, and you have to adjust and think together about how to move forward, given the current context. So this is why we have what we call reviews. Reviews are to review things. By definition, this is the name of it, reviews. And reviews is to sit and discuss and see the situation, how things have been developing, and if there are new priorities, we need to adjust together.
Right, so maybe this will take me to the next question. In recent months, the Egyptian government has received a significant influx of FDI, grants, loans from partners other than the IMF, including UAE, EU. How's the government prioritizing public spending in general to maximize, obviously, benefits out of these resources, and what measures are put in place to ensure transparency and accountability in their allocation and use?
No, thank you for this question, and there are a couple of things I want to highlight about this. The first thing is that we already publish every year, by the end of in August, September, a report. This is a 2 years program. When we started drafting and publishing our state ownership policy, we publish an annual report to monitor the status of this and the progress there. And in this report, there is a section that provide all the details of the divestiture program, that provide all the details of the any transaction that involved the exit of the government from certain activities or from a certain company or offering certain shares to investors. So it has a very detailed description about the seller, the buyer, the process, the legal background, the legal nature, and the size of the deal, the proceeds. So it's something I would highly recommend people to. It's on the Information Decision Support Center of the Cabinet website, and it's there. But coming back, so it's published, and it's good practice. And not only about the divestiture, it put also assessment about the entire status of the government ownership policy. What are the key reforms? If there are reforms to level the play field or to improve competition in the market, if there is any other reforms related to the doing business environment. So it's a good summary. But coming back to the Ras Hikma, I think one of the great thing about this deal is that the structure of it. I want to talk a bit very quickly about it, but also the use of the proceeds that I think were well used in my point of view. The structure itself is quite good because it had also part of it had debt for investment swap, and it's a good deal for everybody. And I think it's something that I really advocate to be well studied and even advocated for other emerging markets, because the bottom line is that you have a creditor that switched part of the deposit into an investment, but all the calculations show that this investment will give us a higher rate of return. So it's a good deal. And of course, Egypt, as in that case, the debtor, got a very big improvement in terms of debt relief in that regard, and so it created a better space for it to reduce its debt service in the future, and it helped in reducing the external debt. So this was good part of it, but more importantly, it's an investment done mostly by the private sector to turn this piece of land or this area to become one of the most attractive touristic destination in the Mediterranean, hopefully, and I think it deserves that. If you go there, I have a house that I bought 7 years ago, very close to this place, so I know it's a wonderful place, wonderful beaches, a lot of private sector involved now, but it is something that can bring to Egypt in the future. It create jobs, bring FDIs, and bring also more tourists and more foreign spending in Egypt and economic activity. So it's a great structure. Coming to the proceeds, I think the entire foreign part was totally used by the central bank to build buffers, to build reserves. It was not used at all to pay any or to be inject any of it into the markets. And then 50% of this deal, the equivalent in Egyptian pound, we received and we used it to reduce the debt. And this is why even last year, despite the shock in the economy, despite the currency, despite the interest rate elevation, we were able to reduce the debt from 96% to around 89.5% by June 2024. Big part of that was delivering on the primary balance, but also, or the primary surplus to be more accurate, but also to use this proceeds entirely to reduce that. We reduce it in a very market-oriented way. Mm-hmm. So how we use that, we got this money. We had domestic debt that was retiring. We paid it when it was approaching retirement or during the day of retirement, but we didn't reissue at the same time or after that. So by doing that, we gradually were able to reduce our domestic debt and, of course, at the end of the day, our total government debt.
Thank you. And then, so inflation has been a significant challenge globally, and the Middle East, including Egypt, is not an exception. But in Egypt particularly, inflation has been persistent and it has added significant pressure on Egypt's most vulnerable populations. What strategies does the government do to strengthen the social safety net programs and make sure to mitigate the effect of inflation on the most needy people?
I think the government with the central bank jointly is trying to bring inflation back on a declining path and to bring it back to the target that the central bank have announced, 10% by end of 2025. I think this is the best thing we can do, by the way. It's the best thing to do is to bring inflation back quickly on track. And I think all our policies together is trying to do that. We are even discussing together what else can be done to look at certain item that has a big inflationary component and to see the market dynamics for those sectors and see if there is ability to create more competition, to deal with supply bottlenecks, to maybe there is an infrastructure gaps there. So we're even trying to now to do together more micro assessment about, because if you look at the inflation, maybe there is 20 or 30 items that has a very big component when it comes to the CPI or the inflation. So we are looking at that now and trying to also have a big deep dive. And I think it's a very smart thing to do for the future in general, to look at those products and see the market dynamics there. We want to bring with us the competition authority and see if there are bigger room for improvement there. But all our macroeconomic policy is catered to, even with the very high cost that we are paying for that service and everything, it's trying to keep things on track so that we can have the inflation coming back. Most of the assessment that I'm reading from independent research entities, domestic or external, is all confirming also that there will be what's called the base effect by February, March, where we can see a significant drop in inflation after the big jump last March when the exchange rate moved significantly in the official market. And so we're hoping that this will help. Coming back to your question also, what else we can do? I think we tried to do last year a couple of things. We expanded significantly our conditional cash transfer program significantly. Now it's more than 5 million household. So it's not individual also.
Is this linked to the subsidy cut or not?
No, it's not linked. It was a good program that was developed over the years with the help of some of the international institutions like the World Bank and others, and it's basically a conditional cash transfer program where you have a very good identification, and then people come in, and actually it's reassessed every 3 years, and some people can graduate out of it, and you bring more people. We started this a few years ago with 1/5 of this number, and gradually we kept increasing it. We also increased the size of support. So it's a good program because it's the most targeted program, and it has a very good measurement. And around it also there has been funding of a decent programs, what we called Forza or Opportunity, and other programs that are trying to build around it, trying to also look at those households and try to empower them by also investing in their human capabilities, in their ability to be employable, in their ability to go back to the market and have the very decent job. So it's a good program that we're building around, and I think it's something that we are hoping to do more going forward. We are also trying to look at on the health and on the education side. We did something very interesting a few years ago, which is called the Public Expenditure Review with the World Bank, and it have identified few areas where we can see a very high value or a return on investment, including either early childhood or preventive care. And we're trying to put in our next budget also space for that and give it more, I would say, priority, both preventive health as well as early childhood. So we're trying to also create some space for that. It's not easy for everybody, but we're doing our best.
Yeah, we also wish you the best of luck with that. So macroeconomic stability is definitely a mean, not an end goal. The end goal is really to promote sustainable growth. And I feel like Egypt has been in a pattern of up and down, just trying to catch up with macroeconomic stability without having enough chance to focus on promoting growth. Recently, in recent years, the public sector has been perceived as crowding out the private sector activities. How does the government plan to reverse this trend and make sure there's enough job for everyone in a fast-growing population like in Egypt?
I think private sector should be leading, and that's a solution for everything. It's a solution for a more productive economy, for a high growth economy, for an economy that also can grow without borrowing or with less borrowing, with less borrowing. It is also a very good recipe also for us to have a partner that grow and also pay its taxes, so it gives us also more resources. So I think this is in the interest of everybody, in the interest of sustainability, and in the interest of doing so. It should be our primary goal, how to bring back the private sector to lead and how to expand its role, and how also to ensure that there is a competitive environment that they are working in. So I think this is, if you look at a lot of what we're doing directly or indirectly, it's all about that. When we say that we put a cap on public spending, yes, it's good for, first of all, visibility, it's good for planning, but also it's very good for the private sector. When we see doing more on the PPP or putting or leveling the play field like last year, when we do a law that ended any preferential tax treatment for our SOEs or for any public entity, it's also something that's trying to give a bigger role for the private sector. So I think I can talk more about that, but I know that maybe we are running out of time, but this is the bottom line. I can link every single effort we're trying to do to having the private sector leading the economy across most sectors.
Absolutely. Maybe I'll have one very short question to close with, mostly addressing climate change. This is not now just the concern of the environment ministers, but it has also become increasingly the concern of finance ministers. And I know this now through the World Bank, there's the new Finance Ministers Coalition for Climate Action, and I'm sure you're taking part of these meetings. What's your vision to address climate action in Egypt from a fiscal and budgetary perspective?
I just came from this meeting, by the way. But so it's a good catch. I mean, I'm very happy about the idea because we saw a lot of SDGs aspirations, great goals, very needed goals that can make a big changes. And usually they bring the finance later, after they put the aspiration and the goals, and then they suddenly discover that there is huge gaps, and so they start getting people to say what's happening, they investigate, and they find that there's no adequate financing for that. So then they come and tell them, the finance people, that please can you join us, and then we are a bit late there. So with the Coalition of Finance Ministers, it was a very good one. It started in 2019. We joined very early in the game, and it was a very good platform where we sit as finance ministers, talk about financing, talking about how to plan, how to think together about issues, how to learn from each other, how to build platforms, and the rest of it. So it's a very good platform, and it lets us all benefit and learn. And it's making us deal with financing of the climate challenges and also issues in a much more proactive manner. It's not, there is no, I don't think that, I mean, people sometimes talk about fancy issues, but we are all learning, and I think everybody is trying to learn there. But it's becoming more and more integral part of our daily business. We benefit a lot. For example, I tell you one simple example that can show what I want to mention here. When we went to the market and became the first issuer of a green bond in the region, there was a lot of concern why we're doing that. It's probably an issuance like other international bond issuance, but it's much more complex. It takes more time. It costs more in terms of resources and preparation, and you don't get any benefit out of it. You borrow at the same cost. So why we're doing it? But it turned out to be a very, I think, a very good move, because the capacity building that we had to carry out, the learning, the ability to learn also how to assess projects from a climate perspective, how to monitor it, how to report about it, the interministerial team that was created to learn from each other. It was enormous capacity building, and it helped us later to identify things and to measure things. And every year we have to monitor, and it has to be also measured by independent parties and by other independent rating agents. So it created a team and a capacity and knowledge at the ministry that later we were able to build on when we prepare our budget normally. So the bottom line is that we are streamlining climate now in our work, in our planning. In the fiscal risk statement, we'll add a section on climate. We're trying to build capacity there. And we're genuine about that, and we're also genuine about creating also more financing or more space, and also having the ability to go to markets and use green financing tools. So it's a mix of a lot of things, but I can say that we are getting more and more capacity, more and more ability, and more integrating it into our daily business operation at the Ministry of Finance.
Thank you, Your Excellency. This is great to hear. Thank you very much for being with us today. We really enjoyed this conversation, and we wish you the best of luck.
Thank you. It's a pleasure to be with you also.
Thank you.
Thank you.